What if I told you that most small business owners are leaving thousands of dollars on the table every year simply because they don't know how to use tax deductions the right way? Imagine running a business, working hard every single day, but giving away more of your money to taxes than you actually need to. That's the problem we're solving today. By the end of this video, you'll know how to maximize your small business tax deductions legally and effectively. And stick with me, because one of the biggest deductions is something most beginners don't even realize they qualify for. Number 1. The power of keeping good records. Let's start with the most basic but most powerful tool you have, record keeping. If you don't track your expenses, you can't deduct them. The IRS won't just take your word for it. They want proof. That means saving receipts, invoices, and even bank statements. For example, if you buy a laptop for your business for $1,200, you need that receipt. Without it, you risk losing the deduction. A simple way to stay organized is by using apps like QuickBooks, Wave, or even a dedicated business credit card so all your expenses are automatically logged. Think of your records like a treasure chest. The better you guard it, the more deductions you can claim at tax time. Number 2. Home office deduction, the hidden gold mine. Here's where many beginners get nervous, but it's simpler than it sounds. If you work from home, you may qualify for the home office deduction. This doesn't mean your entire house, but the space you use regularly and exclusively for business. Let's say you use a spare bedroom only for running your business. You can deduct part of your rent, mortgage interest, utilities, and even repairs. There are two ways to calculate this. The simplified method lets you deduct $5 per square foot up to 300 square feet. The regular method is more complex, but can give you a bigger deduction if your home expenses are high. So if you've been working out of your living room, you might be losing out on hundreds or even thousands of dollars every year. Number 3. Vehicle expenses. Don't overlook your car. Do you ever use your car for business? Driving to client meetings, picking up supplies, or visiting a work site all count. You can deduct your vehicle expenses in two ways: standard mileage rate or actual expenses. The standard mileage rate is easier. For 2025, the IRS rate is 67 cents per business mile. If you drive 5,000 miles for business, that's $3,350 in deductions. The actual expense method means tracking everything: gas, repairs, insurance, depreciation. Sometimes that gives a bigger deduction, but it requires detailed records. Pro tip: don't claim your daily commute. That's personal, not business. Number 4. Meals and entertainment, but with rules. Yes, you can deduct meals, but only if they are directly related to your business. For example, taking a client to lunch to discuss a project counts. Grabbing fast food by yourself because you're hungry does not. Generally, you can deduct 50% of the meal cost. That means if you spend $100 at a restaurant meeting a potential partner, you can write off $50. Keep detailed notes. Write down who you met with and what you discussed. If the IRS asks, you'll be glad you did. Number 5. Office supplies and equipment. The obvious that adds up. Pens, paper, printer ink, desks, chairs, computers, software subscriptions, all deductible. Let's say you spend $50 a month on business software. That's $600 a year you can deduct. Even small purchases like a stapler or calendar matter. They may not seem like much, but over 12 months, those deductions add up. Number 6. Travel expenses. Work trips pay off. If you travel for business, you can deduct airfare, hotels, taxis, rental cars, and even half of your meals. For example, if you fly to another state to attend a conference that helps your business, the trip is deductible. But don't confuse business trips with vacations. If you fly to Florida for a week at the beach and spend one afternoon taking a client to lunch, the IRS won't buy that. The trip must be primarily for business. Number 7. Education and training. Invest in yourself. Did you know that the money you spend learning how to run your business better can be deducted? Online courses, books, seminars, and workshops are all potential deductions. For example, if you spend $300 on a marketing course to help grow your business, that expense is deductible. Think of it as getting smarter while also lowering your tax bill. Number 8. Retirement contributions. Save for the future and save on taxes. If you're self-employed, you can set up retirement accounts like a SEP IRA or a solo 401k. Contributions to these accounts lower your taxable income now while helping you build wealth for the future. For example, contributing $10,000 into a SEP IRA could reduce your taxable income by that same amount. That's a massive deduction many business owners overlook. Number 9. Health insurance premiums. Don't miss this. If you pay for your own health insurance as a self-employed person, you may be able to deduct the premiums. This includes not just your own coverage, but also coverage for your spouse and dependents. With health insurance costing thousands of dollars per year, this deduction can be a lifesaver. Number 10. Contract labor and employee wages. Build and deduct. If you hire freelancers, contractors, or employees, those payments are deductible. For example, paying a graphic designer $2,000 to create your business logo is a deductible expense. Even payroll expenses, benefits, and employer-paid taxes count as deductions. This is one way to grow your business while lowering your tax bill at the same time. Number 11. Utilities and internet. The overlooked deduction. If you run your business from home, part of your electricity, heating, water, and internet bill may be deductible. Let's say your internet costs $100 per month, and 70% of it is for business use. That's $840 a year you can deduct. The key here is to be honest and keep good records about how much of these services are used for business. Number 12. Interest and bank fees. Small but deductible. Do you have a business loan, business credit card, or line of credit? The interest you pay is deductible. Even small fees like annual card fees or wire transfer charges can be written off. It may not seem like a lot, but together, these deductions can make a difference. Number 13. Marketing and advertising. Promote and save. Every dollar you spend promoting your business is deductible. That includes social media ads, website hosting, business cards, flyers, and even sponsoring a local event. For example, if you spend $1,000 on Facebook ads to bring in customers, that's a full deduction. Think of marketing as a double win. It grows your business and cuts your taxes. Number 14. Insurance beyond health. Protect and deduct. Business insurance like liability coverage, property insurance, or errors and omissions policies are deductible expenses. Even specialized insurance, like coverage for business interruption, counts. If you're paying to protect your business, you might as well save on taxes while doing it. Number 15. Depreciation, the big long-term deduction. When you buy large assets like machinery, vehicles, or computers, you can't always deduct the full cost immediately. Instead, you spread the deduction over the asset's useful life through depreciation. For example, if you buy a $20,000 delivery van, you may be able to deduct part of that cost each year for several years. The IRS has rules for this, but it can lead to huge long-term savings. Number 16. Startup costs. Don't forget the beginning. If your business is new, you can deduct certain startup expenses. These include legal fees, market research, business licenses, and even some travel before your business officially opened. You can deduct up to $5,000 in startup costs in your first year, with the rest spread out over time. So even before your business makes its first sale, you can start lowering your tax bill. Number 17. The secret deduction most beginners miss. Remember at the beginning when I said there's a deduction most beginners don't realize they qualify for? Here it is. It's called Section 179. This allows you to deduct the full purchase price of certain equipment and software in the year you buy it, instead of spreading the deduction out over several years. For example, if you buy new machinery for $10,000, Section 179 may allow you to deduct the full $10,000 this year. This can be a game changer for small businesses that need to reinvest quickly. Number 18. Bad debt deduction. When customers don't pay. Sometimes, no matter how hard you try, a customer doesn't pay what they owe you. If you've already counted that income but never actually received the money, you may be able to write it off as a bad debt deduction. For example, if you sent an invoice for $2,000 but the client never paid and you made reasonable efforts to collect, you can deduct that loss. It's a way to make sure unpaid bills don't hurt you twice. Number 19. Professional services. Expert help pays off. The money you spend on accountants, lawyers, consultants, and even tax advisors is deductible. For example, If you pay an attorney $500 to draft a contract, that expense is fully deductible. Hiring experts not only helps you run your business better, but also lowers your taxable income. Number 20. Business subscriptions. The small things add up. Think about the subscriptions you use to keep your business running. This could be industry magazines, online platforms, cloud storage services, or software tools. If you pay $15 a month for Dropbox or $30 a month for Canva, those are all deductible. These little costs accumulate over a year and become a meaningful deduction. Number 21. Repairs and maintenance. Keep it running. When you fix or maintain something you use for business, the cost is deductible. For example, repairing a business laptop or servicing your delivery van counts as a business expense. However, improvements that increase value, like renovating a building, may need to be depreciated instead of deducted immediately. Number 22. Charitable contributions. Give and save. If your business donates money, products, or even services to qualified charities, you may be able to deduct those contributions. For example, donating $500 to a registered nonprofit can reduce your taxable income. It's a way to support your community while also saving money during tax season. Number 23. Telephone and mobile expenses, always connected. If you use your phone for business, a portion of that bill can be deducted. For example, if 70% of your phone use is for business calls, you can deduct 70% of the bill. The same goes for a dedicated business phone line, which can be fully deducted. Number 24. Rent and lease payments, office space counts. If you rent an office, storefront, or warehouse, those rent payments are fully deductible. Even leasing equipment, like a printer or a company car, can qualify. For example, if you pay $1,000 a month for your office lease, that's $12,000 in annual deductions. Number 25. Business licenses and permits, the cost of legitimacy. Every business needs permits, licenses, or certifications depending on its industry. Whether it's a local business license, a food permit, or a professional certification fee, these costs are deductible. For example, if you pay $300 to renew your business license, that's a deduction you should not miss. Number 26. Moving expenses for business relocation. Don't forget this one. If you move your business from one location to another, some moving costs may be deductible. This can include transporting equipment, inventory, and office furniture. For example, if you spend $2,500 relocating your office, those costs can help reduce your taxable income. Maximizing your tax deductions isn't about tricking the system. It's about knowing the rules and using them to your advantage. The more informed you are, the more money you keep in your pocket to grow your business. So let me ask you, which of these deductions do you think you've been missing out on the most?